To talk about cement, and there are some price hikes which perhaps are happening around the corner. Nigel, take it away.
Well, that's right. Finally, we're hearing about some price hikes, and this time around, the street is optimistic that they'll stick because we've heard about numerous price hikes in 2024. If I'm correct, I think it's the worst pricing environment that we've seen for cement in the last many years. Mangesh Bhadang, the Senior Vice President of Research at Centrum Broking, joins us on the show. Hi, Mangesh. Good morning and good to see you in. Finally, Mangesh, the cement space is smiling because, it appears some of these price hikes are sticking. Tell us what's the quantum and how optimistic are you that these price hikes will stick this time around?
Yeah, hi. Good morning, Nigel. So we've been hearing about price hikes for the past couple of months, or in fact more, but there used to be some rollbacks too, so it was not sustainable. But this time around, I think the industry has become more serious. And we have seen, substantial hikes in non-trade segment, which earlier were very used to push through. So in the north, we have seen a hike of around 40 rupees in the non-trade segment, and it has sustained for the first 12 months of this month, 12 days of this month. So we are quite confident that this time around it is different and it will sustain. And in fact, the overall the feedback that has been given to the channels, that is all the dealers and distributors, as well as some of the actions of the companies in terms of the way they are dispatching cement, it does tend to allude to the fact that this time it is going to be more sustainable. So north, we have seen close to 30 to 40 rupees in non-trade. In the west, as well as the eastern region, at least 20 to 30 rupees kind of a growth is there in both trade and in non-trade segment. Whereas east, there are certain parts where it has already taken 20 to 30 rupees kind of a hike, but there are certain regions where it is yet to flow through. And in south, barring AP and Telangana, rest of the regions have seen around 20 rupees kind of a hike. So we are talking about close to 4.5% to 5% kind of a month-on-month improvement in prices in these systems.
Okay, all right. Interesting point you made, Mangesh, because I'm looking at a JPM note. According to them, the feedback that they have got is in north and west, things are still very iffy, while in other parts, some of those price increases have been absorbed. But as you give us your data point, non-trade segment, first 12 days, in the north, the price hikes have sustained. So that's good news. Let's focus a little bit more on...
Let me just add here that trade segment prices are up by 5 to 10 rupees only, which is generally what the industry tracks. But now that in certain regions, non-trade is almost 40 to 50% of the overall portfolio for cement companies. So the net effect on realization growth is going to be 4 to 5% because of this.
Okay. So average of Q3 pricing in comparison to Q2, what was it? Because October was still weakish. So I ask you, what's the average difference that we're seeing?
So current pricing are at least 4.5 to 5% higher than the September exit.
Got it. And for the second half of the year, the street was optimistic about pricing. With this 4.5 to 5%, is it essential that the price hikes sustain, or will there be further price hikes that will be required in the Q4 to match up to your expectations with regard to the estimates that you're working with currently?
No. So even if current pricing sustains, I think it can
good enough.
Deliver higher EBITDA per ton than what we are building it. So just to give you flavor, for the industry, we are looking at say 1,000 to 1,050 rupees kind of an EBITDA per ton in 4Q. But if the current pricing sustain, we are looking at almost 1,200 rupees kind of profitability for the sector.
Okay, all right. And what about demand for the year? What are you working with? Year to date, it was pretty much flattish. And then, in fact, now we're seeing signs, particularly in December, I think there has been some improvement, November and December. Could you tell us what kind of feedback have you got with regard to demand on ground? And for this year, what are you working with? And for FY26, what are you working with for industry-wide growth?
So we saw, November, as you rightly said, till November, the demand was very subdued. And we saw some improvement, say, from the last fortnight of November. And December also, it has picked up. But there are certain regions like north, there is a construction ban, as well as, the winter, very severe winter has started setting in. So obviously demand is not going to be very high. So for this year, we are expecting that 4 to 5% kind of a growth. In fact, more towards 4% growth is going to be there. And next year, somewhere around 8.5 to 9% kind of growth is what we are building in. Having said that, because the demand has been very weak and, the government capex this year probably could be backended. We might see, sharp growth in the last 2 to 3 months of the fiscal. So, we are very confident on that demand coming back in the last quarter of the year.
You're sounding quite, enthused with regard to the recovery that we're seeing, Mangesh. That's good to hear some positivity this morning with regard to the space. Just a couple of more questions. Demand is improving, pricing is improved, input costs are lower. So for the industry, the EBITDA improvement for quarter 3 in comparison to quarter 2 will be how much? And for quarter 4, obviously, you're working with a much better number. So if you could help us out with industry EBITDA estimates, quarter 2 to quarter 3, quarter 3 to quarter 4.
So second quarter industry did close to 680 rupees EBITDA per ton. Pricing growth has hardly been there, say, only 1 or 2% kind of growth, 1.5% kind of growth was there. But last probably, December, last 15 days probably could be better. So that might change a few things. But we are not looking say that 700 odd kind of a number might move to say 800 or 825. No significant jump, and overall volumes could be 2 to 3% higher on YOY basis. That's what we are looking.
Okay, got it. Mangesh, final question before we let you go. I want to get a little stock specific right now. We've got your top picks, but I want to ask you on 2 issues. One is on that India Cements and Ultratech deal, the CCI has got various observations. You think the deal will go through? I don't think most on the street are very much concerned that it could be a deal breaker. So comment on that. And if you have a rough estimate about Rain Industries, their cement capacity, and what could be the rough valuation that someone gets if it is on the block. We're not saying that it's on the block, but in case you had to put a guesstimate estimate to it, you could help us out.
Yeah, so India Cement, since it's part of Southern industry, wherein they have, say, less than 10% market share or capacity share in that region, I really don't see that, there should be any issues from CCI side for that acquisition to go through. Just to give an example, in the past, Ultratech has acquired Century as well as Binani, which had relatively higher capacity share in the in the regional side or in those respective states. Since those were approved, I don't see any reason why they should not go through. And in fact, Ultratech as a whole has one of the lowest within its own reach. They have one of the lowest presence in the southern side. So I think even after the acquisition, they will not cross 20% capacity share in the region. So I don't see any problems in going through. And for Rain, basically I've not looked at it in detail, so would not like to comment on the same.
But in the southern plant, so rough estimate, if you could tell us, if you had to value it, would it be at around $100, $80? If you could help us out, otherwise, we could move on.
So as I said, very difficult to comment, to be honest. Probably I'll have to look at it in detail to go through it. And guesstimate will not work. That's why I don't want to do that.
All right, don't want to push you on that, Mangesh. But just to clarify, the EBITDA per ton in quarter 2 was around 680 on an average for the industry, which could improve to around 800, 850 rupees in quarter 3, and then head to around 1,000 to around 1,200 rupees in quarter 4. We got that right?
Perfect.
Always a pleasure talking to you, Mangesh. Thanks a lot for joining in. And I think this time around you're sounding far more optimistic. So we'll see whether or not that plays out. Wishing you a good day ahead.